Hey, if you're looking to establish your credit or reestablish your credit, you may have heard of Merrick Bank. Let's take a look at what they have to offer you. Hey, my name is Stephanie Adams and I'm an accredited financial counselor. Today we're going to take a look at Merrick Bank's options. They have unsecured cards and they have secured cards. To apply for the Merrick Bank unsecured card, you actually have to be invited to apply. So for today's video, we're going to start with the secured option so you can understand how you can get access to that and how you could potentially graduate up to the unsecured option. Let's start with Merrick itself. This is actually a pretty big bank. It is in the top 200 banks that issue credit cards in the United States, so it is rather big. They have two main products, like I stated before, a secured card and an unsecured card. All right, so we're going to start with their secured card. For this, you're going to need to put down anywhere between $200 and $3,000 for the deposit. That becomes your credit limit. That money goes into an account for you that you don't have access to until you close the account out. For the first year, you're going to have an annual fee of about $36. And the next year, you're going to have an additional fee, but it'll be about $3 a month on the secured side. What's nice about this, though, is after 7 months of good payments, your account can have a review and you may be able to switch to the unsecured option. This account is also going to report to all three bureaus, so it should help build your credit score. On the unsecured credit side, again, it is only available by invitation. It's going to have an APR of like 35%, and that's in their disclosure statement. And it is a variable rate, so it could be a little bit lower, could be a little bit higher based on the prime rate, but really aim for it to be around 35%. So this card is going to cost a lot of money as far as interest if you cannot pay the card off every month, which we recommend paying it off every month or putting a very, very small amount on the card just so that you are not going to pay a lot of money in interest each month. I did dig through the disclosure to find some of the fees that are associated with it. $40 late payment fee. There is no fee for over the limit because I'm not sure that they even allow you to swipe to go over the limit. There's a $40 fee for any returned payments as well. And there is a 2% foreign transaction fee, which means this is not a good card for you to be traveling with. So while these fees seem pretty high for subprime lenders, these are actually pretty on par. Not ideal, but on par with a lot of subprime accounts. So how do you qualify for this account? Honestly, you really need a credit score of only 300. And that's mostly because it's a secured card. Your risk is a little bit lower when it's a secured card because you're putting down money, and if you don't pay, they can just take that from you. So the lowest credit score that you need is a 300. We're talking bottom of the barrel. You're going to be able to get this card. You have to have a stable income. And if you're going through bankruptcy, you're not going to qualify for this card. You have to wait until you're done with bankruptcy before you apply for this card. And if you've got a lot of U.S. tax debt, you won't qualify for this card either. I like to go over the disclosure statements when I am reviewing cards. As far as excessive fees, you kind of agree to it when you sign up for this card. You just have to pay attention to when you're going to be charged those fees, and like the next year, how those fees are also going to be hit. Because like I said, with this card, in the first year, you get hit the annual fee right off the bat. So when you get the card, you're going to get the card with a lower balance on it. And then the next year, they're going to hit you every month for like $3 a month, and that will be your annual fee. So as long as you read the disclosure statements, it very clearly spells out how these fees are going to affect you. Most people recommend you keep your utilization under 30%. I absolutely agree with that. You don't want to be paying a lot in interest, so keep the card balance as low as possible. And then after 7 months, make sure you call them to see if they're willing to do a review of your payment history so that you might be able to switch over to the unsecured side. Here's what I think. As with any card you sign up, make sure that you know how you're going to get billed. If it's going to help you rebuild your credit, I say go for it. But you have to be able to control your spending. And if you can't pay the balance off in full every month, you probably need to review your budget to figure out how you can avoid carrying a balance on this card. So I want some feedback from you guys. Has anybody used Merrick before, and what were your thoughts? How was the customer service? Let us know in the comments what you think below. So stay tuned. We're going to do more of these credit card reviews to help you make better decisions on what you sign your name to. My name's Stephanie Adams. We'll chat soon.